Hello, hi, it's Adil bringing you a intermarket analysis outlook on the FTSE 100 for the week's trading commencing the 16th of June 2014. Okay, it's been a while since I've done the last video. Unfortunately, all I can say, very busy. I always try my best to do a video, but because I'm trading and family etc., you're absolutely exhausted and shattered by the end of it. So, and also I'm quite busy with my mentoring classes as well at the moment. So I am focusing a lot towards the educational side. Obviously, always trying to improve the way in which I can convey the message or educate the average individual. There's a mentoring program that I run on a 4-week basis via Skype, which I'm putting a lot of attention towards that. Also trying to organise a separate fundamental a course of understanding the fundamentals and trading based on fundamentals, trying to put that together too. So just generally very busy studying, obviously family life as well. My little young daughter hopefully starting school, starting nursery soon, so focusing on the family life and trading as usual as well. But the last 2 weeks have been, or last 2 to 3 weeks have been abnormal, shall we say, at the least, due to the QE carrot that's being dangled 1 minute and then obviously being taken back the next by the European politicians. And this week obviously we had the geopolitics with regards to Iraq and Ukraine to deal with as well. Okay, so let's see where the FTSE 100 is going in the week ahead. So what are the fundamental concerns first of all, because obviously that dictates sentiment and eventually obviously that plays out via technicals. So okay, so first of all, I think one of the big issues obviously will be this week will be the Iraqi issue. Okay, the concerns regarding Iraq, the oil fields, etc. As we can see, oil prices here. There's a chart that I've put up just now. Oil prices obviously have broken, almost hit the $107 level on a weekly chart. The next level of resistance potentially is 110 and 114, and obviously the 120 level. So there's nothing stopping this from a technical perspective. Yes, there is. From a fundamental perspective, no. I mean, obviously you've got the situation in Ukraine over the weekend. As I speak at the moment, the embassy in Kiev is being, people are hurling cocktails as we speak. So, and there's been, I think, 49 or 50 soldiers or Ukrainian soldiers that have died over the weekend. So, situation is escalating there. There's no de-escalation whatsoever. So, and adding the fact that the situation in Iraq, obviously, Iraq insurgents advance, US sends carrier to the Gulf. That's not exactly good news. Ukraine separatists shoot down military plane, 49 killed. So certainly not good. Okay. Iran says envisages Iraq role with the US if Washington tackles regional militants, etc., etc. So this certainly isn't looking good. China says we'll never send military to oil rigs back with Vietnam. So China, Vietnam. So overall, it's not looking good. Okay, it's not looking good from a geopolitical point of view. And geopolitics, as we all know, causes oil and gold to rise due to fear. Fear causes equity markets to sell off, and money generally tends to run towards the dollar and the bond market, with the yen and the Swiss franc catching a bit as well. So it's all about risk on, risk off, and geopolitics certainly is risk off, and that obviously causes the markets to fall. So obviously they're the concerns that will overriding concerns next week. Okay, then we have the Mr. Carney concern, talk about higher rates. So it's all about talking about higher rates. Mr. Carney obviously is trying to pop a bubble in the housing market. Okay, so he has started to talk about us adjusting market expectations. Okay, so pound near 5-year high on Mr. Carney's comments, as we can see here. Okay, pound near 5-year high, Mr. Mark Carney's rate rise hint. Okay, so obviously he's trying to pop a few bubbles and adjust the expectations with regards to a rate rise. So obviously sterling's almost hitting the 1.7 level. That's hurting exports, and obviously the concept of higher rates is obviously helping the currency because of the return or yield that can be achieved there. So that's certainly a factor. So obviously that's hurting the FTSE 100. Obviously the higher costs of capital, adding the fact that the export market obviously is under pressure as well. So there's two variables that can hurt the FTSE 100. So that's another variable. Okay, then you have the additional variable of QE or no QE in Europe. Okay, so that's going to be dictated heavily So if obviously the fact that they have been dangling the QE carrot and then taking it away, the latest statement out of one of the ECB or EU officials was the fact that they know they can't see any deflation at present. So if he doesn't see deflation at present, why on earth did Draghi start talking up QE? It just doesn't make sense. Okay, there's a lot of contradictory statements coming out of the EU zone at present, and obviously the more uncertainty, the greater the contradictions, then obviously the greater the sell-off. Okay, so again, that's a concern. So geopolitics and rate rise, that's going to be the two main concerns. Having said that though, employment data obviously is quite stellar and spectacular this week out of the UK, so that's certainly impressive. But rate rise plus geopolitics certainly doesn't bode well, adding the fact that Chinese data was better than expected as well, so that should have sent the FTSE higher, but unfortunately it didn't, it sent it lower. So because the house builders were under pressure, so these are all factors that we have to consider. Yeah, let's just look at the sectors for the FTSE. The banking sector, as you can see, certainly has been under pressure. This is a daily chart. Okay, 60-minute chart as well. It did bounce initially, but certainly doesn't bode well. Okay, it doesn't look healthy, that chart there at all. The mining sector certainly is on its way down. Okay, certainly doesn't bode well at all. Even with Chinese data failed to stay afloat. Okay, so adding the fact that you got the oil and gas sector is putting in a topping tail here. So just keep an eye out for that. That's certainly an important part on a daily chart. Okay, and obviously it's topped out and sold off ever since. So that certainly doesn't bode well for the FTSE either. Retailers obviously making a new low. That doesn't bode well for the FTSE either. So if unemployment rate obviously is falling dramatically, and obviously that's certainly helping the consumer, or it shows the health of the consumer is improving. But having said that, if the sterling is obviously moving higher, then that certainly doesn't help exports, does it? Hence the reason why the retail sector more than likely is under pressure. Adding the fact that rate rise, obviously that then reduces disposable income. Again, that doesn't help the retail sector because of the average individual's propensity to consume. Okay, so and adding the fact that you've got uncertainty regarding geopolitics, again, that's going to be a factor. Adding the fact that we've not really they've dangled the QE carrot in Europe, but obviously nobody's bit that yet and nobody's tasted it. So again, that's an uncertainty. So we just play it day by day, okay, and we'll see exactly where this market wants to go. Given the fact that obviously the Japanese yen has been strengthening due to the fact that there's potentially no more QE out of Japan as well, given the fact that the GDP is starting to rise, and again, that's caused the yen pairs obviously to come under pressure, and the stock market, your US stock market, certainly has come under pressure as well. Okay, so before we go ahead and look at the FTSE, let's just look at the US market, and the main one I want to focus really on the Dow. And the Dow Transports and the Dow Jones. Okay, so the Dow Transports is the key. Obviously, that's been the leader and always has generally been the leader. And that the leader is obviously showing weakness. It's broken the key trend line, upward sloping one. We have bearish consolidation because we're in the lower 50%, that red candle. Okay, the bears remain in control. The 60-minute chart certainly doesn't bode well from this perspective because we have this bear flag formation here. That certainly doesn't look good at all. So obviously lower lows, lower highs. That's basically what we're expecting at present, okay? Especially given the fact that we have obviously triggered this H&S formation here. So you got your left shoulder, obviously your head, then your right shoulder, then we broke lower. So if you look at the high here, it's at 8250. Take it to the base, which is around the 8090. So we do have certainly quite a considerable fall yet, okay? So keep an eye out for that. So obviously 80, 90 to 8250, as you know, that's quite a considerable move on the downside. So you're looking at around the 7900. 7900 is probably the previous resistance equals support. So watch out for 7900 on the downside. So given the fact that we've got the H&S formation in the Dow, if there's a H&S formation in the Dow, obviously that doesn't bode well for the FTSE itself, because obviously they are interwoven. Right, so let's have a look at the Dow Industrial. Same thing again, 60-minute chart. As you can see, H&S formation here. That certainly doesn't bode well. Look for a right shoulder, then obviously a break lower. That's basically what I'm expecting next week. Okay, given the fact that geopolitics, etc., is dominating. So just keep an eye out for that. Okay, and the daily chart again, bearish inside consolidation above previous resistance equals support. That should eventually break, potentially come to test this lower channel here. And that obviously doesn't bode well for the FTSE 100 now. Let's have a look at the FTSE 100. FTSE 100, we're in a symmetrical wedge pattern. We've broken down south. Once we've broken down south here, this obviously now has become very vulnerable. Given the fact that it's become vulnerable, we expect this move potentially to go even lower, possibly even test the 200 MA. So we keep an eye out for that. Okay, there is this potential previous resistance equals support around this region here. This obviously there was support in this zone here, and then there was resistance in this zone. So this is quite an interesting zone around the 6,700 level. So watch out for 6,700 next week. 6,700, 200 MAs around the 6,690, 6,660 level. So 6,700, 6,660 is certainly a downside target for the FTSE 100 going into next week, and that's exactly what I'll be expecting. And I'll be taking that on a swing short trade going into next week from Monday. Okay, that's basically what I'll be doing from that perspective. Now let's have a look at its peers. So FTSE 250 certainly doesn't bode well. Why does it bode well? Because we had an inverted head and shoulders pattern here. So a failed pattern equals an emotive move in the opposite direction. So inverted head and shoulders, we had a potential bull flag, we failed. A failed bull flag equals an emotive move in the opposite direction. So therefore I expect double bottom 15,400 next week on the FTSE 250. Okay, so you've got horizontal support in this region here, possibly 15,500 if obviously the sell-off does go deep and geopolitics take center stage, and the Asian markets obviously sell off come the weekend, or given the weekend news that we've experienced, then down we go. Okay, so keep an eye out for that on the downside. So FTSE 350, let's have a quick look at that. Okay, so obviously we've got a triple top, quadruple top here, double top obviously in the last month or two. Obviously this doesn't bode well, so therefore I expect this to break. This should break lower, given the fact that obviously sterling's higher, that's hurting exports. Given the fact that there's talk of rate rise, that's hurting the costs of or disposable income and the propensity to consume. So that's a double whammy. Add in geopolitics, and that certainly doesn't bode well whatsoever. Given the fact that commodities rising generally is good if it's based on economic growth. If there's no growth, then it's based on geopolitics and fear, then that certainly doesn't bode well for the FTSE 100. Okay, and the FTSE doesn't like to rise, given that background. So keep an eye out for that, folks. That's certainly a lateral target on the downside. Now let's have a look at the FTSE 100 on a smaller time frame. The 10-minute, obviously we've left some gaps behind. 60-minute chart, lower lows, lower highs. Obviously we've put in a lower low than the previous low, so therefore lower low 6760. Just to get that correct, yes it is. So, okay, so look for a potential pullback, and then down we go. Okay, so 10-minute chart again, there's an unfilled gap at 6840, and there's an unfilled gap at 6870. Now, can that close? Okay, that's certainly a possibility, certainly an option. Okay, going into obviously Monday's trading, I'm short. I remain short from Friday's trading, but this pattern does certainly look interesting. Okay, so keep an eye on this pattern here. Whether or not we play out is a different story. I don't expect that to play out. I expect it to go down to 6760 and potentially lower. Can this gap close above? Yes, it can. Can this gap close above up here? Yes, it can. So given the fact that if we have a bias change, 6840, 6870 are two targets on the upside. How will that happen? Only if Mr. Carney comes out and retracts his potential statements with regards to higher rate rise, or if we got stronger economic data moving in the opposite direction. Again, that's debatable. I'm a day trader. I'll take it every day as it comes. If the market does turn bullish and starts to reverse in the opposite direction, then I have potential targets on the upside, and I'm happy to switch my bias. It's irrelevant to me. Okay, it's always about obviously formulating a game plan and adhering to a game plan. As Marty Schwartz once said, I became a winning trader when I was able to stay to hell with my ego. When I'm wrong, making money is more important. Okay, that's very, very important. Don't call the market a bull or a bear. It can switch. Just try the trend. Jesse Livermore. Okay, so very, very important. Okay, markets can remain illogical longer than you or I can remain solvent, Mr. Schilling. Okay, so it's very important, very, very important. Okay, to listen to the market. If the market speaks and wants to go higher, follow it. If the market speaks and wants to go lower, follow it. Okay, this is just my game plan. My game plan is based on the fact that geopolitics will obviously dominate. Obviously, a rate rise concerns higher sterling certainly doesn't bode well. And if China obviously is weak overnight, come Monday's trade, then down we go. Okay, so that's something that we certainly focus on for now. Okay, so that's basically a wrap there, folks. Okay, so I've given you my understand about my interpretation and my insight. I can certainly go into it deeper from an intermarket analysis perspective. That's something that I do with my students. I try and give an insight on a daily basis. I mean, one of the key factors, just to add weight to my argument of the markets going lower, the FTSE 100 going lower, and going to the 200 MA around the 6660 to 6700 level, is the fact that the German DAX is starting to show weakness. Okay, it's potentially breaking this trend line here, given the fact that QE obviously has not been confirmed, and contradictory statements out of the EU zone. Also adding the fact that the German DAX has certainly rallied, and obviously has factored in, has baked into the cake any potential QE as it is. That's certainly a factor. and adding the fact that geopolitics are taking centre stage, and obviously that doesn't bode well for Germany, which is an exporter. So if the Ukraine situation, like it is on the weekend, is escalating, Russia is one of the biggest export market for Germany, and that doesn't bode well. Okay, so focus on that, folks. Okay, so I can elaborate, I can go on all day long. I think that's enough for now. Follow your yen pairs, that's an important clue. USD JPY, Euro JPY for those that are coming into trading at present, because it will give you a good barometer for the bias in the market and the risk in the marketplace as well. Okay folks, I think that's a wrap. Right, risk on, risk off. Remember always, wax on, wax off. Goodbye now.